Yo, welcome to the TBX Trading Mentorship. And in today's video, I'm going to be talking about Forex analysis. Yeah, now we are getting there. So, in Forex, we have basically two major types of analysis. We have fundamental analysis and we have technical analysis. Although, I think recently I've been hearing stuff about sentimental analysis, but I actually don't know anything about it and I don't use it. So, if you want to learn about sentimental analysis, you can just go to YouTube or so and just search in the sentimental analysis. But currently, those are the two major types of analysis, which is fundamental and technical. And also, this fundamental analysis, I'm just going to do a little bit of I'm just going to do a review about it because I don't really use fundamental analysis. But I'm going to tell you what I know about fundamental analysis and what I do. Um, and what I do when there's sometimes that the forex market is reacting to certain news. I'll just try to tell you guys what I do during certain times. So let's start with fundamental analysis. Fundamental analysis is all about trading the news. As simple as that. I personally don't analyze with this, and if it is what you're interested in, then I don't think this course is for you because I actually don't base in fundamental analysis. But since fundamental analysis is all about looking at essential values of an investment, its application in forex is all about looking for at the economic condition and how it affects the nation's currency. So you can just actually read most of these. So let me just tell you what I know about fundamental analysis. Most of all this I got from the ideas came from Investopedia. So you can also go to Investopedia, yeah, to learn more about fundamental analysis. You can check out some guys on YouTube and the like. So personally, I just see fundamental analysis as trading the news. Show you guys. So it is just about there are sometimes that when a news is released like NFP non-farm payroll, which is released every first Friday of the month, CPI, which is released, I don't know when it is released. I just know that it is released one or two times. I think two, three, four, five times a year, I think. You can correct me if I'm wrong. I don't really like study the news like that. So once these news are released, they tend to push the market. They tend to create very very long spikes in the market. So they tend to push the market to one direction. And if you can understand what direction this news is going to push the market, then and you enter before the big move, yeah, you can actually make a lot of money from trading news. I'm actually not interested in trading the news. I actually did that in the past and I didn't really get it. So let me just stick to what I know since I was already good at I was already getting technical analysis. So what do I do when there's a very big news release? So personally, most of the times I stay off the market whenever there's going to be a news release. So or and if I even have a running trade, most times I either break even, and if the trade is very far away from my entry, probably a swing trade, I I sorry, if maybe I just entered the trade maybe like few hours ago and the trade is still very close to my entry, I most likely close the trade or break even. And if the trade is far away from my entry, maybe I've taken like a 1 to 2, 1 to 3, 1 to 4, 1 to 5, 1 to 7, I might just take partials and break even or close the trade whatever I feel like. But I personally don't wait for news like let me wait for a particular. Okay, the CPI is going to be out by 2 o'clock. Let me see the news from CPI to place the trade now. So I think this is CPI here. Yeah. So if you want to learn more about the news, you can actually check it out on YouTube and the likes. So I don't really know much about how to trade news. So let's come to the next one, which is technical analysis. Yeah, technical technical analysis, as the name implies, is all about the technical side of forex. In this session, we are talking about how to analyze forex markets using trends, demand and supply, etc., to predict where price is going to move next. So, technical analysis is the use of technical tools, I showed you guys in TradingView, in the previous video, that how to bring out some tools from TradingView. So, the use of those technical tools to analyze or predict where price is going to move next is called technical analysis. So, for instance, oh, okay, as you can see, this horizontal line up here. So this is actually called, like, this is a resistance or a resistance zone. So some people can use this resistance zone to predict that, okay, the moment price gets to this zone, price is going to start coming down. And as you can see, the moment price got to this zone, price started coming down. So you're going to be taught how to draw a resistance. And if you can see, I used something here. This is called the Fibonacci. And with this Fibonacci, I was actually expecting price to sell down to the side. And if you look at it again, this is the resistance where I said price came up, came down. What happened when price came up to the same resistance again? It actually came down. So with proper risk management and proper like knowledge on what to do when something happens, or to with proper understanding of the technical analysis, you're going to see that you're going to actually understand a little bit more on what I did here. That'll be very, very, very soon. So as if you can look at this stuff very well, you see this stuff here. You see, it's called a Fibonacci. It's another drawing tool. I was actually using to predict where I was going to enter, and price filled me in. I would have jumped down to the 4 hour time frame, but currently the rain fell. Rain has been falling throughout today, and then actually the network is very, very bad. I'm not connected to any Wi-Fi at the moment, so this is just like an offline chat. So maybe in the next video we're going to show you something like that. But next time, I even have some analysis I made throughout last week or this week, today being Saturday, and everything was nice. Maybe in the next video I'm going to show you guys everything, but everything is being dropped in the group current. As you can see, you are currently offline. You are offline. So in short, price came into, if you look at this very well, we find out that this candle came into this side. This is where my entry is. This is my optimal trading entry, and it fell down to this zone. This is called a support. Price came down to this zone. How did I know that price was coming to this zone? Well, technical analysis, using of this, the use of technical tools. This rectangular box did not attract price, but I use it to just mark out this area where I personally felt that price is going on. And today is actually Saturday. This is so, and this, I think this chart is for last week. So if we play this, price will have most likely gone up. Yeah, I think the price should have most likely reacted from this zone by going up. So that's what technical analysis is all about. Don't worry, we're just introducing you to what these things mean. We have not actually started how to use them and the likes. So this is the use of technical tools to predict where price is going to go to, or to predict movement of price. It's as simple as that. So bottom line, there are many economic indicators with more private report. Oh, I think this is for the news. Yeah. So in technical analysis, we actually have people that uses indicators. For instance, let me see if this is gonna pop up. Please pop up here. This is an indicator. It's called the RSI indicator. This is also part of So for instance, let me just show you. Personally, I use what we call the RSI divergence. Yeah. So for instance, this is an RSI divergence. Boom, boom. Or let me look for a very neater, very clean one. I'm sorry, you guys don't even know what an RSI divergence means yet. So maybe when we've gotten to that place, you're going to learn about heat. So the use of indicators is also a technical analysis. So in this book, we're going to briefly talk about the candlesticks, the trend. In this course, we're going to talk about candlesticks. We're going to talk about trends. We're going to talk about actually, before I don't think we're going to talk about ICT money concept. We're not going to talk about this in details, but we're going to talk about TBX smart money concept. Yeah, it's actually almost the same thing with ICT. I've actually learned ICT and derived what works for me from ICT. So it is not completely ICT. There are some things I don't use that ICT uses. She get so stuff like that. It is what worked for me. After you've learned what I've taught you, you can actually bring out what you understand from it, add your own, and make it what works for you. So, what is a candlestick? A candlestick is a graphical representation of price. A series of candlesticks is called candlestick chart, or just forex chart. To better understand candlesticks, we need to know the properties. We need to know its properties. You think? Okay. Now, what's the candlestick? Candlesticks are just all this. Oh, sorry about that. Candlesticks are just all these candles. You see all these candles? These are what we call candlesticks. And sorry about that. And this candlesticks tells you a lot. Like they tell you a lot. Actually, they tell you about every single thing going on in the forex market. For instance, first of all, you have to understand the basics of a candlestick. So let's go back to this. So we have two different type of candlestick. We have the bullish candlestick. Let me see if there's a way I can't view this picture alone. Okay, let me just zoom in. Yeah. We have the bullish candlestick and we have the bearish candlestick. So okay, I have the bullish and the bearish candlestick. So the bullish candlestick is a candlestick that opens low and closes high. That is, if the open is below the close, that is, it starts moving from down up. Do you understand? It starts moving from down up. So that is a bullish candlestick. So don't forget, when we talk about the terminologies, bullish means something moving from down to the top. While bearish is something moving from the top down. So you get. So the bullish candlestick, every candlestick has these four major. That's the high, close, open, low. Sometimes so there's some and the weak, but there's some candles that doesn't have a weak, but they're actually very rare. But they all candlestick have the same, like they have the same. Should I say they have the same characteristics or something like that? But what differentiates them is the direction they are facing, or if it is bullish or bearish. So as we said, bullish candlestick is a candlestick that the open is below the close, and the yeah, that's all. So why the highest this point is called the high. That is, this is the highest point the price has gotten to before coming down. For instance, let's look at an example. Price opened here, this candlestick opened here, then it moves up to this place, and candlesticks moves up and down, up and down, up and down until they close. So it opened here, maybe it came down. Yeah, this is the low, and it came back up, then it came down to this place, then it closed. So you see these wicks, they are just telling you where the price has been to. This is all the places the price has been to. That's why you're going to check out the charts very very soon. So and the same thing for a bearish. The only difference between a bearish and a bullish is that for a bearish candlestick, the open is above the close. At least the close is below the open. At least this candle opened from the top and closed down. So for instance, this candle opened, went to this high, then came down to this low, then later came up here to close. So this is the wick, this is the wick, this is the wick, this is the wick, and this is the body. The colored part of the candle is called the body. Now let's check out this. Let's check this out. So we're going to look at different type of candlesticks now. Now let's start with this very long candlestick. So currently my chart, the should I call it gold, is the bullish candle, and the black is the bearish candle. So this one, price opened here and came down to this place, then went up to this place, then came down here to close. So this is the low, this is the low, this is the high, this is the open where this body of the candle started, and this is the close. Let's look at another one. This price opened here. You can see where the body started. Let me see. I don't know if I can remove this. Price opened here, came all the way down to this place, then came up to this side, then came to close here. So this is the low, this is the high, this is the open, and this is the close. Same thing here. Price open here, the beginning of this, came down to this place, then up here, then close here. This is the low, this is the high, this is the open, close. Same thing for this. While when we get to this place, price, this price, okay, let's do this. Price came, opened down here, came down to this low, then up to this high, then closed here. You know this price closed here, then the next candle it opened here. Can you see that? This price closed here, then opened here. This price closed here, then opened here. This price closed here, then opened here. Yes. This one closed here, opened here, closed here, opened here. Then this price went high. This candlestick went high. Price went high. Then sold down to this place. This is the low, and then came up here, then closed. Then let's look for another bearish candle. Boom. This candle price opened here. Don't forget the bearish candle. The close is above the open. The close is below the open. So price opened here, then bought came up to this level here, then sold down to this place, then came down here to close. Same thing here, price opened here, bought up to this place, then sold down to this level, then came back here to close. So there's one cool stuff about trading view, and that's when you hover around a particular candlestick and you look at this area here, it's going to show you the open. O stands for open, H stands for high, L stands for low, C stands for close, and that's all. Open, high, low, close. So forget about the rest. So now if I put this candle on this, if I over this candle on this, sorry, my cursor on this candlestick, you're gonna see the open at 1.36. Just look at the side here. The open at 1.36073, the high at 1.36450, the low at 1.36002, and the close at 1.367 36378. So something like that, something like that. So that's in case you get confused on which is the high, which is the low, which is the close, and the likes and the likes. So now you can do the same thing for all of these candles. If I would, no matter how. Now I want to give you guys, just pause the video for a sec and try to get where is it, the open, the low, the open, high, close, low, and close for this big ass candle right here. So I hope you pause the video to check it out. So this is the open, this is the high, that is price open here, came up to this place, then boom, then closed here. So let me see if I can find a candlestick without a wick. Then yeah, exactly. Now I told you initially that not all candlesticks have wicks, but it's kind of rare. So if you look at this bullish candlestick, it doesn't have a wick. There's no wick below here. This one too doesn't have a wick. So this candlestick, this is a bullish candlestick. It means it's going from down up. So price just opened from here, then boom to this high and came here. This one opened here, moved a little bit above. You see the tiny wick, move high a little bit, then came here. I think that should be all about a candlestick. So that's how to identify a candlestick. Now, what do this candlestick represent? What do they mean? So, for instance, now when you see a series of black candles, or let me say, sorry, a series of bearish candles, you can simply say that the price is currently. I'm not saying the whole chart, like the price. This from here, you can see the price is moving bearish. As you can see, price is moving bearish. You can see price is moving bullish here. You can see price is moving bearish here. You can see price is moving bullish here, and the likes and the likes. So, when you now try to combine the idea from one candle, we've talked about, just for instance, seeing just one bearish candle, you can say it is bearish. Just one bullish candle, you say it is bullish. You say just one bearish candle, you say it is bearish. But when you now start like looking at the candlesticks together, when you start looking at and everything together, it's called a forex chart. All of them start to give you one kind of unanimous meaning. Like for instance, this from this side to this side is filled up with a lot of bearish and bullish candles. This is bearish, this is bullish, this is bearish, this is bullish,
We have some bearish in between here. We have some, this is bearish, this is bullish down here, and like that, like that, like that, like that. But if you notice, there is one candle that is still more. The fact that price is moving up means that the bullish candles is more than the bearish candle. We have to take that into we have to like actually note that down because it's actually going to help a lot. So, and that is where technical analysis begin. When you start to use all these technical facts, okay, what is going on here? What is going on here? Okay, why is the price going up instead of down? Okay, this is a very, what happened? Why is this candle so long? Blah blah blah, blah and stuff like that and stuff like that. You start putting all those kind of stuffs together, and before you know it, what are they calling it? You're going to have a strategy and you start making money if you your trading strategy. So, but for now, we're still talking about um what a candlestick is, not the technical analysis in details. So, mm, now forex is all about repetition. Most times it's all about repetition. That is something you've seen before, repeating itself again. So the same way we have we just explain candlestick. We have some candlesticks that have repeated themselves multiple times. For instance, when you see a candlestick like this, it is called this is a an hammer candle, as you can see, an hammer candle, and this is a candlestick that like you can actually see it looks like an hammer where the body closes with a long wick below. I'm not really going to talk much about that, but let me just show you more of it in the candle. Let me even show you more. We have this one is upside down. This one is upside down. This is an hammer. This is another hammer. This is another hammer. This is another hammer. So what do we use this hammer to do? Well, it depends on you. Actually, there was a time, not now, when I was writing this book, I think that was maybe last year or so, then I was still using it. So that's the reason why I included it into the book. So it's can just, and I did not remove it because it can actually help you to improve your understanding about the forex chart. So does that might create something called forex. We have candlestick patterns, and we have candle chart patterns. So those time I traded all those stuffs, and that's the reason why you can see that hammer candlestick in that book. So let me just give you a preview of what are candlestick patterns. Candlestick patterns, these are repetitive patterns. So you get that you can see that the candlestick shows over time, and when we see stuffs like this, we end up using them to make money. For instance, we have a candle pattern called tweezer tops and tweezer bottoms. Tweezer tops is when you see a a bullish candle and a bearish candle of almost the same length together. Can you see this? Let me remove this again. A bullish candle and a bearish candle of almost the same length. So when we see them something like this, we say in a zone, like in this zone, something like this, we sell. So if I see something like this, I can just say, okay, boom. Oh, there's no. I just remembered I'm offline. I can just sell from here down to this place. And we have others called, we have something else called AMA, like the one we just talked about. So let's see if I'll look for an AMA in this zone. This is an AMA. This is an inverted AMA. Inverted means upside down. So this is an inverted AMA in this zone. So I can just, after seeing this, I can just place my sell here, sell from here, put my stop loss above this zone, and take my profit around this um zone, or around anywhere I want to take, maybe 1 to 2, 1 to 3 with the reward ratio, anything I want to do. So we also have I'm not going to talk about candlestick chart patterns. I'm going to talking about candlestick pattern itself. We have dojis. Let me see if I can see any doji. Doji is when you have the body of a candle in between the long wicks. For instance, this is a doji. This is a doji. So you can see the body in between the long wicks. So maybe I missed this and I still need for another reason to enter, and I see this doji. I can just place my sell here, put my stop loss above this zone, and like that, and the likes and the likes and the likes. So there's a reason why I actually stopped using all this kind of stuff. So you can see it is very very nice. But everything has its advantages and disadvantages, and it depends on the kind of trader you want to become. So that's it. That's it. This for this. So let's go to the next topic, and that's trend. Now, trend is when a series of candlesticks come together, moving in one direction. So the direction the candlesticks move in is called a trend. For instance, like you can see, um, you all know this the game of tug of war. Now imagine it is did like this where some guys are standing here. So in what direction these guys are? If the sellers are pulling the buyers, then you say it's a downtrend. If the buyers are pulling the sellers, then you say it is an uptrend. So we have three different major types of trend. We have the uptrend, the downtrend, and the sideways trend. So the uptrend is when price is creating higher highs, lows, higher highs, and higher lows. For instance, mm, don't worry, everything is going to make sense very, very soon. So when price is creating higher highs and higher lows, you say it's an uptrend. For instance, this is a low, this is a high, this is a high. This low is higher than this low. So this is an higher low. This is another high. This is an higher high. This is another low. This is another high. This is another low. But this high is not higher than this one. So this is not an higher high. So from here to this place is an uptrend. A downtrend is when price creates. Let's check out the book. I think I have pictures. I have pictures. So I have pictures. As you can see, I don't know why I can't. I don't know why I can't expand this. Maybe I don't know how to. So let me just do it the way I can. As you can see, this high, this is the high, this is the low. This low is higher than this low, that's a lower high. This high is higher than this high, that's an higher high. So lower high, higher high, lower high, higher high, lower high. So when price keep creating highs that is higher than the previous high, and it might sound somehow confusing, but just open your trading view and look for it. When you see price creating highs that is higher than the previous high and lows that is higher than the previous low, that is an uptrend. That is the price is going up, up. Or you can just look at the forex chart and see something like this. What direction is this moving? This is up. Can you see it? This is moving up. So an uptrend. So and the opposite, the direct opposite goes to a downtrend. Direct opposite goes to a downtrend. This is when price is creating highs lower than the previous high and lows lower than the previous low. So when highs price keep creating lower highs and lower highs and lower lows, then it is called a downtrend. My God, I wrote uptrend here. It's called a downtrend. So let's check this out. Boom. This is high, this is the high, this is the low. This low is lower than if you draw an horizontal line from this point to this point, you find out that it might not be much, but this low is lower than this previous low, and this high is lower. This high is lower than this previous high. This high is lower than this previous high. This low is lower than this previous low, like that, like that, like that, like that, like that. So that is a downtrend. That is a downtrend. So the third type of trend is something called a sideways trend or a ranging market. So this is when the highs and lows are almost the same. That is, price is creating series of higher highs and price is not creating higher highs and it's not creating higher lows. It is just like ranging, something moving sideways. Can you see something moving sideways? So this is, and the breakout is when a ranging market becomes um a when a ranging market breaks into a trend. So, for instance, look at this. Price is just moving inside. Price was just moving up, higher, higher, up and down, up and down, up and down until boom, price breaks out. So, you can see price can either break up to continue the uptrend, that's a bullish market, or down to continue the downtrend. So in summary, of trend, um trend is basically like a circle. It's basically like a circle. So price can jump from an uptrend to a downtrend, or from a downtrend to an uptrend, or from an uptrend to a ranging market, then from the ranging market to a downtrend, or from a downtrend to a ranging market. Let's open before it becomes confusing. Now let's scroll. Oh, this is, we don't have too much of sharp data with us here. Well, let me just show you something. Mm, okay. Now price was coming down initially. This is an high, low, lower high, lower low. Then boom, price started creating higher highs and higher lows. Just take it for it in this chart. You're going to understand it better later on. Then from downtrend to an uptrend, from an uptrend, if you go to a lower time frame, this is going to show you a downtrend. But don't worry, I don't. Does this work? Please tell me this works. Nah, it doesn't work. In the next video, don't worry, I'm going to show you. I'm going to explain more of trend and how trend actually works. Because if you don't understand trend, you cannot do anything in the forex market. So in the next video, we're going to do justice to trends and how trends work. So I hope you guys learned a lot today. And if you have any question, just let me know. And I'm going to do a video on the whatever question you have. I'm going to do a video on whatever you have. So I hope you guys enjoy this one. Thank you very much.